protect your children, Lord. In your holy and matchless name I pray. Amen.
Amen.
Amen. Amen. Woo! How you feeling, Albert?
2 thumbs up.
2 thumbs
Good
up,
energy in this room.
2 thumbs up.
Great energy.
Do you have anything for us? You have something special?
I do.
For us?
It's relatively quick. Whenever you want me to
We'll
jump
go ahead and
in.
let you jump on it real quick, and then I just want to hear a little bit more from you because I haven't seen you for so long.
Awesome.
Boom. Go ahead. You can take stage right here so they can see your face. Right there. Oh, there he is. There he is. There.
Good morning, everybody.
This is Albert. Malachi, have you met Albert before? Yeah. DJ, this is your first time. Yeah. DJ's new. Michelle, we got Michelle right here. She just joined the team. And then, of course, you see Alicia up there as well. You've talked to her before. So, without further ado, Albert.
Yes. Thank you. Good morning, everybody.
Good morning.
So first off, I just want to say it's a privilege for me to be here. Thank you, Thomas. The reason I came today is I'm going to split it into 3 sections. We'll go relatively fast. So, number 1, I know what you guys are, the goals you guys have. You want to dominate, like Thomas said, and that's exciting. That's good energy. That's good drive, and I think you guys are all going to pull that off. I know everybody here is very dedicated. I've worked with most of you, and I know Thomas has a big drive that rubs off on everybody. So, amen to that. So what's one of the most exciting things you guys hear when it comes to buyers from lenders?
Low interest rates.
That's for sure there, and then of course you guys hear the 0 down stuff, right?
Yep.
0 down program. So the one that we have actually got beefed up a little bit this year. It's a little bit better. So I'm going to give you guys a quick breakdown so you guys have an idea, and I'll go into section 2 and 3. So 0 down, guys, this is exciting. Buyers want to get in. A lot of times they want to get out of rentals, apartments, complexes. They want to get into a house. The down payment's usually a challenge. This program will take the down payment away. They can purchase up to $568,000 with 0 down because the loan limit's just increased.
What's 568,000?
568. So $568,000 max purchase price with
a 0
no
down
payment. No down payment. The program will give them their 3.5% down. It's a second mortgage, no interest, no payments. It's forgiven after 3 years of not selling or refinancing. It's as close as you guys are gonna get to free money. So they buy the house, no down payment. 3 years later, that assistance that they received is gone. So truly, it's a 0 down. It's not like Cal Hassel where it bears
As long as they
interest.
keep the loan.
Yep.
And everything's paid on time.
No refi, no sell for 3 years.
No refi, no sell.
If they do sell or refi, then there's a prorated amount that they have to pay back within those 3 years.
Now, what if the program, you know how loans get sold?
Mm-hmm.
You could be on paying a company for 3 months and then it gets sold to another company, then it'll get sold to another.
Nothing changes.
That is still.
That lien will stay there.
It's only if we're doing something.
Yeah.
Okay.
And this is also flexible, guys. 3.5% can go towards a down payment, or it can also go to closing costs. Like we have a veteran that wants to purchase a home. They don't have the closing costs. We can often use this program as well. So pretty good. The grant that they get can be a gift, which means it's immediately forgiven if they're a teacher, firefighter, law enforcement, paramedic, and like a sheriff or correctional officer. So law enforcement, firefighters, teachers. So it's not a grant that they get as a second mortgage. It's a gift that goes away the second that they buy the house.
Wow.
Now,
Free money.
are they paying any money on that if someone, before the 3 years, there's no payment on it?
No payment, no interest. It just gets forgiven every year, a prorated amount. 1/3 gets forgiven every year they have that.
Is it all health care or just paramedics?
The exact ones are firefighters, paramedics, and EMT, and medical or healthcare workers. So that could be like a nurse, things like that.
Police?
Police as well.
What if my wife works for the school?
Usually staff of school can count as well. So that's good. They don't have to be a first-time buyer. So that's really good. It has to be a single-family residence or an approved condo or townhouse. Cannot be a manufactured home. Now here's the one part, guys. When we go into 0 down, I want to help you guys. I want to help you guys as much as I can to put you guys in control. One of the things that I highly recommend, and this is subject to that I want to talk with you guys. So you're on the phone with a borrower, or you guys are sitting and talking with them. I'm going to make a recommendation. You guys definitely don't have to follow this. I know Thomas sets the tone on this. If you guys get the opportunity, so let's say I'm talking with the client and I say, hey, so a lender is going to be a big part of this transaction. We're going to find you the right house, and for 30 days or 25 days, whatever it is, you're going to be working with a lender. So I've got a couple guys that I'm gonna recommend to you, and let me give you an idea of what these guys are gonna look for, so you don't get surprised when you talk to them. If you guys want, you can pitch it this way. It's 3 things, very simple, guys. They're gonna need credit, income, and usually assets. Assets are where that money will come from for the closing costs in this case. Credit, they're gonna need 660 or higher for the 0 down. That's really important, guys. So we squeeze one end, the other end gets bigger. We take the down payment away, they gotta have decent credit. And then income, they need something steady for 2 years. So the way I recommend you guys prime the borrower or the potential buyer is, hey, I got a couple guys I'm gonna recommend. Just to give you guys an idea so you're not surprised, here's the 3 things they're gonna look for. It's credit, they're gonna want a 660, it's income, they're gonna want 2 years, and we gotta show some money for closing costs, because you guys know closing costs are gonna be.
Now, when we write these loans, is this gonna be an FHA loan?
Almost always FHA,
What's
for sure.
The day is 30, 45?
45 on the 0 down, for sure.
45 days?
Yeah,
And the loan go up to how much? You said 500?
568 purchase price,
568.
which is really good. Last but not least, guys, here's the most exciting part. This program's been capped off at a 45% debt to income ratio. They just increased that to 50.
Ooh, wow.
If you have a 680 FICO or more, or higher.
Ooh.
So that opens it up, guys. 568 purchase price, 50% DTI. We can get some guys, we can get some people in
So
on this.
45 at the 660 mark?
Yes, and then 50 at 680 plus. You guys don't have to get technical like that with the buyers, but I just want to let you guys know that it's a little bit more flexible. But remember, credit's got to be there, income's got to be there.
60%?
Yes,
And that's 68 or better.
for sure.
Does probation work for that too? As far as
Probation officer?
Yeah.
Yes.
Perfect.
Correctional officer?
Okay, perfect. Gotcha. Perfect.
Question.
Yes.
Is there any camping assistance for conventional?
Conventional is an option too, but it's a little bit different. So I got to go case by case on that one. Most of these programs are going to go FHA.
Okay.
Most of them. So guys, number 1 was the 0 down program. Number 2 was just a quick suggestion, and definitely Thomas sets the tone on this, guys. But if you get the chance when you talk to these guys, ask them about those 3 qualification factors.
Let's say someone retired from police or firefighter, would they qualify there, or do they be working?
That one, the only retired category that works is a retired teacher. That's on the CalSTRS program, or the CalPERS retirement.
Okay, so any of them that are retired to that,
What's that?
except for teachers?
Teachers that are retired can go for the
No,
gift
yes.
instead of the grant.